Our gents, hope you good. So on this lesson, I'll be continuing lesson 1.1, where I'll be explaining the market participants that we have. So we have two main market participants, which are your retail versus the institutions. Overall, there are three market participants, but the main ones i-retail ne-institutions. So ngizoqala nge-institutions. So the institutional traders are your smart money, right? So the institutions includes your banks, your hedge funds, prop firms, right? These guys are the guys that trade billions, right? So they actually move the market. You like the big boys. They are the ones that we call the big boys. Right? So, my example now, it's your JP Morgan. So, JP Morgan are the biggest players in forex market. So, when they buy billions, let's say example, they buy billions in Euro USD, obviously market is a move, right? But when we come into the market and buy with 0.01, nothing is going to happen to the market because we are the small players. So that's the difference between them, the smart money, and us, the retail traders. We are just the followers of smart money. Yeah? Then we have Goldman Sachs. This is a large bank too. We have Citadel hedge fund. Citadel, that's the hedge fund. BlackRock and proprietary firms like your Marvin Trading. So yes, Hispanisayo Ferele Marvin Trading. So the big boys, they don't chase price or they don't chase signals. That's what I wanted to say. They use liquidity, algorithms, and massive volumes to enter at premium or discounted prices, often trapping us retail traders in the process. Those are the big boys. So the key successful thing in trading is learning how to follow the smart money. Right? Not retail traps. So in things on Fundisa Yodagu lesson 1.2. The mentorship is about the smart money concept. So that's what we are learning here in this mentorship, the smart money concepts. So now let's go to retail traders, which is us, me and you traders. So retail traders are people like us, individual traders using laptops, phones, or desktops to try to catch setups that formed, right? So Tina, we execute from home. We don't have to go to any institution. You need Wi-Fi, your laptop or your cell phone. We trade our own money, unlike the institutions. Right? So the example of institutional trade, retail traders, nawe, we execute trades obviously go MetaTrader, analyzer go trading view. Or traders, the newbie traders who trade the YouTube strategies, singasho kanjalo, or laba trade demo accounts, nalaba balandela signals. I don't sell signals or give out signals, and social traders. So those are the retail traders. Hope that made sense. Then there's lavabo three. Abestri sizulu. Laba city in central banks. These are the central banks. We call them the macro players. Bakhulu kunathi, but abekho bakhulu kuma institutions, institutional traders. So umsebenzi wabo abatradele ama-profits. They don't trade for profit. They intervene for national currency control. So isponsor controller in currency value of currency and controller in interest rates of the country and inflation. So lama moves law mawa controller, or when they enter the market, when they intervene to control the market, those actions they take, they influence major price moves in the marketplace. So leyo nto isiza ukuthi nathi sikhone ukuketch ama moves on those actions they took. So an example of these central banks are your Federal Reserve, which is found in the US, the European Central Banks from Europe, the South African Reserve Bank, and the Bank of Japan. So these are the market participants, the people who participate in the market. We are the smallest of the smallest. The retail traders, guys, are the smallest. Then they are the big boys and the macro boys. So I have an example. Ama institutional traders ngawathatha as this. Let's say like ngizama explain ukuthi sibona kanjani mase kunama institutional traders or the big boys in the market. So in market they move, and then all of a sudden there's like a big displacement in the opposite direction they be move or continuing the direction. So le big displacement means like there's big institution coming in the market. So example it's like, picture this, let's say une swimming pool le abantwana le, mawungena kuleyo swimming pool leyo angeke ukhona ukudisplace or ukukhipha lamanzi lawa alapha kuleyo swimming pool at all, uzokhona ukuswima kahle and stuff. But then let's say sithatha i-elephant encane then sifaka khona lapha kulamanzi lawa, kuzoyenzakala kule pool le rather, kuzoyenzakalani, amanzi amaningi inside that pool azophuma, right, and leaving like a small amount of water at all. So leo it displacement at all, it displaced the water at all. So that's how you know Gucci, like there's a big player inside the market by those big displacements that occur. I hope that made sense. So your homework is to go and look for, let me see, go and look for like moves like this. Let me show you. Displacement, displacement. Okay, so must check ala. Timbo, clear one. Okay, so in market base move smooth, ne? La smooth. Then we had this push. This was like a shifted market structure, right? Then the market, now one of the market stick lawa blue. Beg uti like a big ganjan, like abonisa with like ama buyers afunungena but our konungena at all. Then ama sellers are push a footy market. Then bona le candlestick lily blue lily one lily thing so. This one. Look at this candlestick. That candlestick yasho ukuthi hayi man noma sisela siyaphansi ne iprice ifuna ukubhaya kahle nayithola. Bheka the next move futhi price yele yayehla bheka this sharp move yayithola. So that's a signal ukuthi khona abantu abafuna ukungena yayithola, like the big boys, they trying to enter the market. So what you can do for now is go and study the market and look at the markets. Like go and study this market. My buy yenza so going up, yeah. Then my seller yenza so at all. Then mangabe I move it's consolidating, it's going to do like this. Go and look for these things on your charts, like about higher highs, your higher highs here, higher low, higher high, higher low, lower low, lower high, lower low, lower high, and equal highs and equal lows. Go and look for these things. That's your homework for today.